Hello, everyone. I hope you're all doing well. So, as promised, today I am completing questions 4, 5, and 6 of the 2020 paper. Remember, as I said, question 7 I wasn't going to because I had done that in the last lecture prior to yesterday's exam prep session. So we've already covered that question. It's just question 4, 5, and 6 left. So question 4, the first part of it, which is here, is just theory. So I'm not going to be going through that. Let's look at the practical question for this specific question. Remember, this is based on Learning Unit 5 as well. So here, so let me just actually write that down. It's based on Learning Unit 5. Okay, so I'm just waiting for it to load on my side. All right, so it says in question 4.2, Beta Ball Sports manufactures two products, a rubber soccer ball and a leather soccer ball, using the same machinery processes. You are provided with the following information relating to the existing production period, and they've given you the volume, the material cost per unit, so that's your direct material, the direct labor cost per unit, and then the machine time per unit in hours. They also said to you that total production overheads are as follows. They've given you the costs of each of these different activities or cost pools. Then they said to you an analysis of production overhead activities for the period for the volume of products manufactured revealed the following. It was the number of setups, the number of material orders, and the number of times that material was handled. Calculate the total budgeted product cost per unit for rubber ball using the ABC method and round all your answers off to 2 decimal places. Now, what's important to note here is that firstly, it was a total per unit. That's the most important thing that we need to look at, not a total overall, just a per unit figure. And then also, it's just for one of these items, which was rubber ball, not both of them, and it's using the ABC method. So it's important that we identify these key concepts early on. So here, you're going to do the normal method of first look at where does your work actually start. With the ABC method, remember there are 5 steps that we follow. So you need to look at where does our work actually start with a question like this. What do you need to work out, and then what they are asking for at the end. So remember total product cost, and it is per unit. The total cost is calculated as the sum of your direct material, your direct labor, and your overheads. So now we know that the material and the labor costs have been provided to you. All you're going to do is determine the overheads. And for the overheads, we have to follow the 5 steps of your ABC method. So here, in terms of your ABC method, remember step 1 is to identify all of the different costs involved in the overhead or manufacturing process, and they are the ones that were listed out for you here. They said to you total production overheads are as follows. So these are the different activities, and that's step 1. Step 2 is to determine their total costs. Now, they have actually given you that as well. They listed out what the specific what the specific activity is here. So this is the one I'm highlighting in yellow, and then their respective costs are the one I'm highlighting in purple. So the 50,000, the 5,000, the 2,000, and the 8,000. So that was step 1 and 2 of the ABC method. Step 3 now is to determine your cost driver volume. So your volume is also given to you. It has been provided here at the bottom. So I'm also going to change the color of this. This was for your setups. This was for your material orders. These were for your number of times your material was handled. So they gave you that, and then also for your machining, they gave it to you at the top, but we need to do a bit of conversion there. So step 3 is also done for you. So that's step 1, 2, and 3 of the 5 steps of ABC done. The 4th step is now to calculate your cost driver rate. So let's calculate your cost driver rate. And remember, it is taking the total cost and dividing it by the volume. So this is how we're going to get to our rate. So I'm just going to clear all of this and let's draw up our table calculating what the cost driver rate will be. Okay, so here you're going to say that the different overheads are sorry, I need to draw that up again. So the overhead cost itself is, well, where the overhead cost itself comes from is we said the machining department. That is what was written out here for us. So the machining department was the first one. Then you had the setup costs. So I'm just going to say setups. Then you had ordering costs. So I'm just going to say orders, and then handling. Okay, so those are your 4 different activities that go into the overheads. Now we're going to list out their cost. So the total cost is the 50,000 for machine hours. They said to you within brackets specifically that machine hours is the cost driver here. Then 5,000 for setups. 2,000 for orders and 8,000 for handling. Once you have that, we can now determine the volume. So in terms of the volume, you have, as I said to you, you need to do a little bit of working out for the first one. But for your setups, your order costs, and your orders and your handling, it's pretty straightforward. So let's do the ones that are straightforward first. So for your setups, it's 1 for rubber ball and 2 for leather ball. So collectively, you're going to add them, and that's going to give you your total volume. So you're going to show that it is 1 plus 2, and please make sure that you do show the working out of this. It's 1 plus 2, which is equal to a total volume of 3. Then for your orders, it's 1 plus 1, so that gives you a total of 2 orders across both products, and then it's 2 plus 3 for the last one, which gives you a total of 5. Then for the first one, your machining. Remember they said to you machine hours is the cost driver, and then they said to you at the top, you will look at the last column. It is the machine time per unit, and this is in hours. Now this is per unit, and you need it to be a total. So it's 0.35 for the first product, for leather ball, for rubber ball. It's 0.35 per unit. So you need to now take that 0.35 and multiply it by the number of units to give you the total for rubber ball. The same with leather ball, it is 1 hour per unit. There are 700 units that need to be produced, so you're going to multiply it by 700. So you're going to say, and I don't have much space here, but I will try and fit it in. You're going to say it's 0.35 times 1,000 units plus, actually, I'm not going to have enough space here. So let's take this and write it on the outside. So it's 0.35 for 1 unit times 1,000 units plus it's 1 hour for leather ball times 700 units. So collectively, that's going to give you 1,050 hours that are needed. So you must show this working out within the block if you can, or outside the block if you'd like I had, but you must show it. I just didn't have space within the block to include it, so I didn't include it there, but you will naturally include that to show that this is where your values came from. And again here, like I mentioned to you yesterday, your marks actually come from just the working out, not even the final answer. So you need to ensure that you're showing your working out throughout. So that was your volume. And now to calculate the cost driver rate, you're going to take your total cost and you're going to divide it by the volume. So 50,000 divided by the 1050 gives you an answer of 47.62 per labor hour here because, sorry, per machine hour here because this is based on machine hours. So I'm going to say per machine hour, but you don't need to specifically say that. Then it is 5,000 divided by 3, which is 1,666.67. And remember, they asked you to round off to 2 decimal places, so please ensure that you do so. And this is per setup. Then you have 2,000 divided by 2, so that is 1,000 per order. And then 8,000 divided by 5, and that's 1,600 per time handled, so per time. Okay, so now you have calculated all of your cost driver rates. The next step is now to apply that cost driver rate to, in step 5, to the specific requirement for, remember they asked you to do this for rubber ball. So the specific requirement for rubber ball, in order to calculate the material overhead, the manufacturing overheads. Remember the total cost is calculated as the direct material plus the direct labor plus the manufacturing overhead. So we need this manufacturing overhead. So we need to firstly now apply it and then apply all of the rates that we had calculated to get to your overhead and then put that overhead into this calculation to calculate the total cost. So to now apply the overhead, you're going to say that for rubber ball, and I'm going to leave enough space so that we can work it out here. The first activity was the machining department. And here, and remember this is just for rubber ball, not for both projects. So we'll write that at the top. To work out the total cost of the machining for rubber ball, it's 47.62 Rand per machine hour. Now we need to know how many machine hours does this specific product need. So here we said that this was the requirement per unit, and we are producing 1,000 units in total. So you're going to say that for all of the products that this product is going to be produced, that this company is going to produce, it's going to be 1,000 units times 0.35, and that is going to be, oh gosh, why is it not writing? Okay, so it's going to be 0.35 for 1 unit, and in total we are producing the 1,000 units and that is now multiplied by 47.62. So this gives us a total cost of 16,667. Then you have your setups, it's 1,666.67. We need to look at how many setups does the rubber ball product need. So it requires one setup. So you're going to say 1,666.67 times 1, which is 1666.67. Then your orders, it's 1,000 Rand per order. And again, product rubber ball requires only one order. So it is going to be 1,000 times 1, which is 1,000. And your last one is handling, which is 1,600. Let's look at how many times this, sorry, that's a 0. How many times this product is handled. So this is 2. So now you're going to multiply that by 2, and that is 3,200. So now you're going to total each of these, add up all 4 values that I've highlighted. That's going to tell you the overhead cost in total. And that is an amount of 22,534.67. But you need it to be a per unit figure. So you're going to divide this by the number of units. So rubber ball has 1,000 units that are being produced. So that divided by the 1,000 is going to tell you that the overhead cost per unit is 22.53. Okay, so you're going to take that 22.53 and now you're going to put it into this formula. So it is your total cost being calculated as your direct material plus your direct labor plus your overhead. So now we know that your overhead is going to be the 22.53. So I'm going to write here 22.53, and then your direct material, they said to you, was 5 Rand per unit for rubber ball. Your direct labor was 5 Rand 50. So you're going to sum up the 5 plus the 5 Rand 50 plus the 22.53, and collectively that gives you a total cost of 33.03. So the total cost for rubber ball under the ABC method is 33.03. Okay, and that is question 4 complete. So please remember to look at what are the steps involved in ABC in the ABC method. Look at of those 5 steps, what has been done for you already, and then where your work actually starts. And then it makes it easy for you once you've identified that you know what you have, you know where you're starting. You are then able to identify these are the different costs involved, and they generally will always state it to you in this way. They'll say to you, your total overhead costs or total overheads are as follows. They'll give it to you. You know then that those are the ones that you use to calculate your cost driver rate. They would also have given you the information for you to calculate the volume, which, as we said, was here in the second table at the bottom. And then part of it was here at the top as well in terms of the machining department. You then use that to calculate your cost driver rate. And then once you have the rate, you apply it according to what the requirement is for that particular product. Once you have that overhead rate, if you're calculating the total cost, it's then the sum of your direct material, your direct labor, and your overheads. Okay, so that is question 4. Let's look at question 5. Okay, so question 5 says Maureen has decided to produce and sell cricket bats in her spare time. She has a shaded area that was constructed at a cost of 68,000 rand several years ago. So let's highlight that it was a cost of 68,000 several years ago, and which will be used for production purposes. Maureen has determined that each cricket bat will require 300 Rand in wood. So here you're going to see in terms of the questions asked, they are asking you to calculate your variable cost, your fixed cost, your admin costs, and so on. So everything that we highlight here is going to fall into some of the categories that you come across. So let's have a look at these. So they said to you that Maureen has determined that each cricket bat will require 300 Rand in wood and grip of 60 Rand. Other minor expenses like varnish and stickers is estimated to be 10 Rand per bat in total. Okay, so here they've given you all of these costs which are falling into the categories of your direct material and your indirect material. Then they said to you, so this is your direct material, the two at the top. This is your indirect material. Then they said to you she will hire students to do most of the work and pay them 350 Rand for each cricket bat complete. So this would be your direct labor. She will rent tools at a cost of 2,000 Rand per month. The total monthly electricity bill is 1,500, and it's estimated that 40% of this is attributable to the production of the cricket bats, and the remainder is for Maureen's personal use. So basically, for your electricity, it's only going to be the 1,500 times 40%. And these both fall under your manufacturing overheads, and they are both fixed in nature. So you'll need to make note of that because you will see that some of the categories that they ask you to put these costs into are such that the cost will fall into more than one category. So for instance, if you have this cost, your rent and your electricity, it would be a manufacturing overhead cost, but it's also going to be a fixed cost. So you would obviously need to indicate that. Okay, so here they said to you then the next bit that remember also just the 40% is for your electricity. So then they said to you, Maureen has drawn 48,000 Rand of her savings account to provide the capital needed to get the operation going. The savings were earning an interest of 6% annually. An advertising agency 1,000 Rand a month. So advertising is 1,000 Rand for the month. And Maureen will hire students to sell the cricket bats and pays a commission of 20 Rand a bat. They said to you from the above information, identify all of the examples you can find of the following type of costs. A single item may be identified, and this is what I was saying to you just now. A single item may be identified as more than one type of cost, meaning, like I said, with your rent and your electricity, they are falling into the category of manufacturing overheads, but they can also fall into the category of a fixed cost. So it doesn't and is not restricted to one category. Also indicate whether the relevant rand amount relating, sorry, also indicate the relevant rand amount relating to each cost, either per unit or per month, depending on the type of cost. So the first one was looking at your variable costs. So they wanted you to identify everything that is a variable cost. You don't need to total them because they just simply asked you to identify. They didn't ask you to calculate what they are. They did ask you to show the rand amount, but again, you are not calculating a total for these. So your variable costs are going to be, let's have a look at them. You will list them out because there is a mark allocated to what they actually are as well. So you will need to say that this is the amount. Please don't just put in the answer. Again, this is something I saw come up quite commonly with your test 2, where you had simply shown the amount and not where the cost came from. Unfortunately, you are going to lose a mark if you do not show that, for example, the first of your variable costs would be the wood involved, and that would be the direct material. So you need to specifically show that the wooden grip was the direct material, and this is a mark for literally saying direct material. Oh gosh, sorry. So there's literally a mark for saying direct material and saying wood for the first one, and then for the next one saying, or you can join them, that's perfectly fine as well. So you would say direct material. Gosh, what is wrong with the screen? Okay, let's try that again. So you'd have your direct material, and in brackets you can say wood and grip, and there's a mark allocated to actually just saying that. So that would be the 300 Rand and the 60 Rand, so that would be 360. So you can do it individually as well, that would be perfectly fine. Then you have the indirect material, which is also a variable cost, and that was the varnish and stickers. So here you can say indirect material. This is a variable cost. It will change with your level of production, and that is 10 Rand. Then your next variable cost is your direct labor, which was 350 Rand. So you're going to just put in the 350. And the last of your variable costs is the 20 Rand for commission. Okay, so that is all of your variable costs. You don't need to show a total here, so we can stop there. Then your fixed costs are going to definitely start off with your rent that they had mentioned to you here. So it's to state that it's 2,000 Rand. Then you have your electricity. And remember, with your electricity, I said to you, you need to show the working out of 1,500 Rand times 40%. And that would be 600 Rand for the month. And then the only other fixed cost was the advertising that they said to you would be 1,000 Rand for the month. So again, you don't need to show a total here. So that is your fixed costs as well. Then you have your selling and admin costs. So your selling and involved in getting the product to the final customer. So here it would be your commission firstly, because this is involved in getting the product to the customer, and then also your advertising. So here I will do it on the side. It's going to be your advertising, which was the 1,000 Rand for the month, and then your commission is 20 Rand. Again, you don't need to specifically, sorry, you don't need to total this. What I would advise though is write down per month here and per unit here. Now, it was not necessary for you to calculate a total, because either way, if we were calculating a total, we would have to bring these to the same basis. You cannot have one per month and one per unit. So you would have to make some sort of adjustment if you were doing a total. Then you have your production costs. So here for your product costs, it's basically the same as your manufacturing costs. It is the sum of your direct material, your direct labor, and your overheads. So I'm going to write it here. Product costs are direct material plus your direct labor plus your manufacturing overheads. This is for your product costs. So your direct material was a 300 Rand for the wood and the 60 Rand for the grip. So I'm going to show it here. Direct material was 360. You can show within brackets, it's the 300 plus the 60. That's for the wood and grip. Then your direct labor was the 350 Rand. They gave that to you as well already. Then you have the manufacturing overheads, that was the indirect material. So indirect material, and that was 10 Rand. The other indirect material, the other manufacturing overheads was your rent and electricity. Rent was 2000 Rand, electricity was the 600 Rand. And those are all of your product costs. Again, here, I would suggest maybe just saying that this was the direct material per unit. This is also the direct labor per unit. This was also indirect material per unit. This was for the month, so per month, and electricity was also per month. Okay, so those are all of your product costs done. Your manufacturing overheads is literally the last three that I had listed out here. So that is your indirect materials. It's quite repetitive. So it's your indirect material, which was 10, your rent, which was, so 10 per unit. Rent was 2000 Rand for the month, so per month. And your electricity, 600 Rand. Excuse me, 600 Rand for the month. Okay, so that's your manufacturing overheads. Your sunk costs were, remember, any cost that was incurred where you're never going to recover any of those funds. So that was the initial cost of 68,000 Rand that they had paid for the shaded area. So you would just simply write down then that it is, let me just clear this. So this would have been the 68,000 Rand for the shaded area. And then the last one was asking you for your opportunity cost. So your opportunity cost is going to be the 48,000 Rand that she had drawn out of her savings account for the capital. And this was earning interest of 6% annually. So you're going to say that it is 48,000 Rand times your 6%. This is the interest that they would have earned. And then it's for the month that you are going to be working this out for. So the opportunity cost was 240 Rand per month. So she would have been earning interest of 240 Rand per month. But because she decided to withdraw that money and use it for the capital to fund this project, she obviously is no longer earning that interest. So this is the opportunity cost. Then the next question, 5.2, says Maureen is currently looking into a business opportunity that will require her to manufacture branded matched t-shirts for a local cricket club. Although she thinks it might be a good opportunity, she is a bit wary of accepting the contracts as her free time is limited and she will only be able to produce 100 t-shirts per month. So she's only able to produce 100 t-shirts a month, and these t-shirts will be sold at 200 Rand each. Then on the next page, they have said to you that the costs associated with this opportunity are as follows. You have the cost of the material, 40 Rand, cost of printing, 5 Rand, labor is 25, and 10 Rand is your variable cost. And then your overheads, your fixed overheads, is 15,000 Rand a month. So the first four are variable costs, and the last one is a fixed cost. So they said to you, calculate the break-even point in units and advise Maureen whether she should take up the opportunity. Provide a reason for your answer. So the break-even point is calculated, remember, by taking your total fixed cost and dividing it by your selling price per unit minus your variable cost per unit. So we have your total fixed cost, which is your numerator. That's the 15,000 that they gave to you here. We also have your selling price, which they told us at the bottom of the previous page was 200 Rand. All we need to do is calculate the variable cost. So your variable cost is going to be the sum of these that I had indicated to you here. So you're going to say it is the sum of the 40 plus the 5 plus the 25 plus the 10. So that gives you a variable cost of 80 Rand. So here you're going to plug in the 80 into your formula, and that gives you a break-even point of 125 units. So now you know the break-even point. They said to advise Maureen whether she should take up the opportunity or not. Now this 125 is saying to you that this is the point at which her income will equal to her expenses. So if she's producing anything more than this, she's going to benefit from it and make a profit. Anything less than it, she's going to make a loss. Now they said to you on the previous page that she can only produce 100 t-shirts. So this means that she's not even able to reach the break-even point. So she should not take on this opportunity because she's not going to be able to meet the break-even point, which means that she will be making losses if she takes on this project. Okay, so that is question 5. Let's look at question 6. So question 6 is based on pretty much the same thing that we had seen in the previous 2021 paper. Together your two financial statements, a production statement and the trading statement, as well as the note to these statements. So they've said to you the following information relates to company G6 Limited for the year ended 30th June 2020. They've given you all the transactions, and on the next page, they've given you your opening balances here at the top, and then your closing balances here. And they said to you, prepare the production statement, production cost statement, trading statement, and the relevant notes for the year ended 30th June 2020. So remember, we start off in a specific sequence where we are entering information into the notes first, the 3 notes first. Then we enter information into your production statement, then your note number 4, and then your trading statement. So let's do this. I'm going to draw up these statements first. So let's see where I have a bit of space. Okay, so let's clear this. And I'm going to draw up your production statement here. Okay, so we have the production statement for G6 Limited for June 2020. Okay, so you start off with your direct material and your direct labor. Those give you your direct costs. These are note number 1 and 2. Summed up gives you your direct cost. Then you add in your manufacturing overhead. That's note number 3. This gives you your total production cost or your total manufacturing cost. Then you're going to add in your opening work in process balance. Subtract your closing work in process, and that's going to tell you the total cost of finished goods produced. So remember, this goes within brackets and that's your total. Okay, so let's get started with your notes. So the first note is going to be your direct material note, and let's do it on this page at the bottom. So here you have your direct material. Actually, let's move it a bit onto this side so we have space if we are doing another one. Okay, so your direct material, so you label it direct material note. Please write out the full words. Then you will start off with your opening inventory or your opening balance. And this is from the next page at the top, raw material inventory 127,894. Then you have any purchases. Remember, it would be net purchases. So here it's going to be any credit and cash, but they only mentioned credit to you, credit purchases of your raw materials, and that's 503,750. So you'll say net purchases 503,750. Then it is any freight, railage, carriage, and so on. So there's freight on your raw materials, 99,833. So you're just going to simply say freight and then you're looking for any other imports and so on, but there wasn't mention of any here. So those totaled will give you 731,477, and then you're subtracting your closing balance. And your closing balance from the next page is going to be the raw materials on hand, 99,000. So you're going to subtract the 99,000, and your final answer from your direct material account now is 632,477. So immediately we're going to put that 632, oops, sorry. 632,477 into your direct material, in line with your direct material, into your production statement. Then your direct labor, let's also do that at the bottom here. So your direct labor, we're looking for anything associated with your labor in terms of your, so direct material note, in terms of the wages itself, UIF, medical aid, pension fund, and so forth. So here you have this entire bit that is associated with your direct labor. That's the wages, the pension, the medical aid, the UIF. So here it is the factory wages, the pension, medical aid, and UIF. And the entire amount is going to go to your production statement. So the wages is 828,600. The pension is 172,500. Medical aid 227,200, and UIF 8144. So that in total is 1,236,444. And that amount again is immediately going to go into your production statement 1236444. Okay, so that together gives you your direct cost at the top, which is 1,868,921. Now let's look at your overhead. So here, let's identify all of your overheads. So for your overheads, you have, and I'm going to clear everything at the bottom because we no longer need these. So for your overheads, it's everything apart from your direct material and your direct labor, but still costs incurred within the factory. So here we start off by looking for any indirect labor, indirect materials. Then you go to things like rent, electricity, insurance, depreciation, maintenance, and so forth. So let's start off with any indirect materials. So they said to you, and I'm going to just write it out here. So this is note number 3, which is your factory overheads. I don't have space to write it at the top, but you can include that at the top and say that this is note number 3, manufacturing overheads note. So I try to fit it in there. So the first one is going to be any indirect materials. So that's actually right above this. Here they said to you, consumable stores indirect materials issued to the factory is 144,710. So that is what goes into your overheads, 144,710. Then you need any indirect labor. So they mentioned that to you here, indirect labor 500,250. So indirect labor 500 to 50. Then you have, as we said, anything else now. So you have electricity for the factory, rent for the factory, telephone for the factory, insurance for the factory, and depreciation on the factory machinery. So let's write all of those down, starting with your electricity, and that is 211,450. Then you had rent, and that's 82,700. Then telephone and fax, 111,166. And insurance, 205,894. And the last one is your depreciation. So you must write out the full word. So 180 to 11. So now we sum up all of these. I don't have space at the bottom to write it clearly enough for you. So I'll write it on the side. That amounts to 1,436,381. So now you will take this figure to your overheads account, to your production statement in line with your manufacturing overheads. It is now the 1,436,381. This now collectively gives you, remember, you're either adding up this total at the top and your overheads, or you can add up those three. So that would give you a figure of 3,305,302. Then you're adding on your work in process opening balance. So they gave you this at the top here. That's 43,394, and you're subtracting the closing balance, which is here, 617,450. So let's take that to our statement. Your opening was 43,394. Your closing was 617,450. That gives you then at the end 2,731,246 for your production statement. Then you're going to draw up note number 4, which is your cost of finished goods sold. Okay, so note number 4, cost of finished goods sold. And you're going to now basically take your opening balance of your finished goods. So opening finished goods, let's have a look at what that is. That was here. That was 216,450. So 216,450. Then you're going to add on this figure from the production statement. That was your cost Oh gosh, I hate when the screen does this. This is your cost of your finished goods produced, or cost of production of finished goods. So that's 2731246, and then you are subtracting your closing balance. So your closing balance of your finished goods is this last item, 477716. And that's going to give you a final answer of 2,469,980. Okay, so that last item now, this 2,469,980 goes into your trading statement as a second item. So let's draw up your trading statement. So your trading statement now, the last bit is going to be just the calculation of your gross profit. So you're going to say trading statement of G6 Limited for June 2020. So it's your sales, your net sales, minus your cost of oh gosh, the whole thing disappeared. Okay, I'm not going to write that heading again. So net sales gosh, what is wrong with the screen? Blackboard is so frustrating. And then minus your cost of your finished goods sold, which was the last item from note number 4, and that's going to give you the gross profit. Okay, so here your value from note number 4 already we had calculated was the 2,469,980. Let's look at what your sales was. They said to you from the next page that your sales of your finished products was 11,440,000, but you also had returns worth 49,361. So you need to show that within brackets, the 11,440,000 minus the 49,361, and that gives you 11,390,639. So the sales minus your cost of sales gives you a gross profit of 8,920,659. And that is question 4 complete, question 6 complete, which was your production statement, your trading statement, and the note to both of those statements. So as I said here, you can always you must always draw up your two statements first and then your notes. But when you are entering information into them, you always start off with your direct material note, your direct labor note, your overheads, because you need those figures for your production statement. And then once you've drawn up your production statement, the final figure from there is needed for note number 4, which is your cost of finished goods produced, or cost of production of finished goods. They both mean the same thing. And then once you have note number 4, you're drawing up your trading statement, because the final figure from your note number 4 is needed for your trading statement. Okay, so that is it for your 2020 exam as well. And then, as I said, question 7, I'm not going through because this I have already done with you in the last recording for Learning Unit 7. It's exactly the same example. In fact, I've taken it out of this paper. So it's exactly the same figures involved. You can simply look at that example there. Thank you, everyone. All of the best with your studying and with your exam as well. If you have any questions at all, please don't hesitate to email me. I'm happy to assist.